Hey tribe, super exciting. Right now, at this moment, we have a huge opportunity to leverage into the Chinese stock market because yesterday, 370 billion yuan has been unleashed into the stock market, and it is not too late yet. I'm going to share with you why in this video and some of the key stocks that I am buying. Now, before I begin, this is a disclaimer. This video is for, well, educational purposes, informational purposes. It is not a recommendation to buy or sell. It's my own opinion. So you make your own decisions and let me know in the comment what you think of the key content in this video and whether, well, do you agree or disagree? Now, what happened was this morning when I woke up, when I saw my portfolio, I realized my Chinese stocks has increased significantly. There's a jump. Something happened. So I went to check what happened and I realized that yesterday, 24th of September, the China government has unveiled the most aggressive stimulus since pandemic. Now, why is this important? Think about it, guys. Would you like to go back in time? Would you like to go back in time to the COVID time? I mean, I'm not talking about like the difficulties in terms of the economy, but the stock market. The stock market went down a lot during COVID, and because of the stimulus by the governments all over the world, the stock market went up. So right now, China is going for a second round of stimulus, and it's one of the most aggressive since the pandemic. So imagine having that boom in the particular stock market in China. So we can look at Chinese stocks. We may not be able to invest in the China stock market directly, but let's take a look at some of the possibilities. So what exactly happened? I'll share with you the key stimulus that's happening, and let's judge for ourselves where we can park our money. Now, the first stimulus, the first thing that the government did was to cut the reverse repo rate. Now, what is the reverse repo rate? Repo means repurchase. And when they talk about repo repurchase, they are talking about the China central bank. In every country, there's a central bank. And the purpose of this central bank, okay, I'm going to put bank instead of just C and a B. Okay, is this: the central bank lends money and also allows other banks to deposit money into the bank. So we talk about other banks, like in every country, there are major banks, there are smaller banks, and these commercial banks that serves you and me and the businesses, they can choose to put money into the central bank and they can choose to borrow money from the central bank. Now, central bank has an interest rate as well. And when the government reduces interest rate, think about it. So if I'm a bank, I'm operating as a bank, I have money, I want to put it in the central bank when the interest rate is high. It's because I'm going to make more money using my money. But now interest rate is lower, I'm not going to be so, I would say, incentivized to put money in the central bank. Now, this is what the government wants. They want the banks to take out money from the central bank. Say, don't put money here. Well, the interest rate I'm going to give you is low. Go and invest into the economy, invest into businesses, invest into other areas so that you can boost the economy. Put the money into the country out there. Okay, so the banks are now having more money. Well, that's what they are likely to do because they are not going to put money in the central bank as much, okay, to invest into the economy. Now, this is the first point. Second point is this: because interest rate is low, the banks can also borrow money, okay, borrow money from the central bank at a cheaper rate. And that's where they have double money. Okay, so it's not really double, but you get the idea. The double the impact. Now they have more money injected into the economy. So this is likely to help the economy. Okay, so this is what we will see. It's just why Fed has cut the interest rate, is to allow corporates, allow businesses to borrow more money, allow even the residents to borrow more money, maybe to buy property and other things. Okay, so policy number one. Policy number two, there's also a loosening of real estate rules. Now, China's real estate had become a bubble for quite some time, and the government was very concerned. So they wanted to sort of like have an easing of the whole entire real estate hotness and make sure that lesser people can speculate in the stock market, no, the real estate market. So the first thing they did right now is the down payment requirements have changed. Now, initially, to buy a property in China, you need to put down 20 to 30% if you're a first-time home buyer. They have reduced it to 15%. Now, you may think, well, it's only 5%, it's only from 30% to 15%, it's only 15%. It's huge, because if you take the whole entire bell-shaped curve in, let's say, China, and they have billions of people, as you guys know. Now, initially, let's say only a certain group of people, let's say a median group of people, can afford the property down payment. And now, by reducing it from 20 to 30% to 15%, another huge group of people now can afford to purchase property with whatever cash that they have. Now, this is huge because this group of people when they go into the market and say, finally, we have been waiting, we have been saving, I'm going to buy my property when I can afford it, suddenly they can afford it. What's going to happen? Think about it. Likely, there's going to be a boom in the whole entire, or demand. There will be an increase in demand for houses. This is likely to happen. Now, the second thing they did is this. The second home buyer. So if you bought a first home, the government is very careful to say, well, I don't want you to buy multiple homes. Because if you're buying one home, unlikely you'll be staying in the second home. So why are you buying that for? For investment, for speculation, and they are pretty much against it. So initially, the down payment for the second home is 40 to 70%. Think about it. So if a house costs, let's say 1 million, you have to put a a down payment of $500,000. Right now, you only need to put 20 to 30% of it. So another huge group of people drawing the same bell-shaped curve. Those who already have their first home. Now those who have cash to buy the second home, they can buy multiple second homes probably. So again, the demand in the whole entire real estate in China is likely to increase also. Now that's not all. Besides the down payment, which is already huge, even the mortgage rules have changed. So the first thing is the rates of the mortgage have lowered from 5% to 6%, lowered down to the loan prime rate, which is the benchmark. They're saying it's going to go below 4%. So this again allows it to be more affordable for many home buyers want to be. Okay, so they want to buy the homes, and now it's already a lot more affordable. Plus, the requirements to get a loan is lowered. So it's easier to get a loan right now. Credit score can be lower, and you don't have to prove employment and things like that. It's a lot more people are going to have access to the real estate in China. A lot of Chinese in China is going to have that. Okay, so this thing about it. Do you think that this will benefit the real estate in China? I think so. I'm not asking you to buy real estate in China, but this again will help the whole entire economy as a whole. Okay, because when real estate demands goes up, constructions and a lot of other like services to build the homes will also benefit. So now the third thing is this. The third thing is, well, to me, the most interesting portion and pretty unique in my opinion is the stock market stimulus. Typically, the government will stimulate the economy. But for the China government, they are stimulating the stock market specifically. And the first thing they did was to inject 300 billion yuan for stock repurchase. So they are telling companies right now, here, take my money and go and buy back your own shares. Now, in case you don't know, the implication is huge. And let me explain to you why. Now, when I talk about taking the money from the government, it's not really free money. They are just lending companies at a very low interest rate, like 1% or even less. So example, not a recommendation to buy or sell, but I do own this stock, Alibaba. So Baba, right now, they are paying about a 2.2% dividend yield. So every single share that's out there that they give to their shareholder, they are benefiting. Okay, they are actually rewarding their shareholders by giving them dividends at a 2.2% rate. Okay, around there, depending on share price. Right now, if I buy back the shares, what does it mean? It means that I save on this 2.2%. I don't have to pay this 2.2% dividend. And how much do I actually have to pay to borrow the money from the government is 1%. So I borrow 1% to earn 2%. Do you get that? I'm borrowing money from the government at 1% and I can save 2% of cost. Would you do that as a company? Well, it's very logical. And how does it benefit the stock market or shareholders? I need to understand what it means when stock are being repurchased. It's very powerful. So example, let's say 10 of us, we are shareholders in this company. And each of us, we have equal shares. So there are 10 shares in the company. So each share represents 10% of the company. So if each share represents 10% of the company, and let's say the company is worth 1 million, just a simple example. So 1 million divided by 10%, every single share, every share, it's worth 100,000. Does it make sense? Okay, so this company shares, the worth, it's 100,000. So, well, if I hold a share, this is worth 100,000, and it's likely to reflect in the stock market. Well, on and off, it'll go up and down, but roughly it'll be at the $100,000 range. I'm too excited. Okay, now imagine there's share repurchase. The government say, take the money, go and buy back some shares. Okay, so instead of having 10 shares in the company, now we purchase back 5 of them. So we say, okay, now those who don't want to continue holding the shares, let me take the money from the government, buy it back from you. And now instead of 10 shares, it becomes 5 shares. So what happens is, now 5 shares means now every single share owns 20% of the company right now. Because there's only 5 shares, well, there is still 100% of the company divided by 5. So now it's 20%. what happens is without doing a single thing, without the company making more money, the company is still worth 1 million. Initially, when it's worth 1 million, every single share, because it is 10% of the company, 10% of 1 million, every share is worth 100,000. Now, there's only 5 shares, and every share owns 20% of the company. So now they own 20% of their 1 million. Every single share is now worth, how much is that? 200,000. So our share value increases. I'm not going to say it's going to double, okay? Because usually, when they do share repurchase, they don't buy back 50% of the shares in the stock market. But can you see, without doing a single thing, share repurchase increases the value of our shares. So every single share now is worth more. So what happens in the stock market? Every single share in the stock market, those that have been benefiting from the stock repurchase, that shares is worth more. The value is higher. And if the stock market recognizes it, the share price will go up. Okay, again, you hear me say if the stock market recognizes it. Because in the short run, they may not. But typically in the long run, just like Benjamin Graham mentioned, in the short run, the stock market is like a voting machine. But in the long run, it's a weighing machine. The true weight of the stock, the value will actually comes out. Okay, so this is the first thing. Second thing from the stock market stimulus is this. The government also injected 70 billion. The first one is for stock repurchase, which is very powerful. The second one is crazy. Okay, why do I say it's crazy? 70 billion injected to institutions and stockbrokers to buy shares. Now, this is something that really blew my mind, because typically government, when they inject money into the economy, they will give it to the mums and the pops and give it to us to say, hey, go and spend, so that hopefully when you actually spend more money, you buy things from businesses, value increases, stock market increases, and things like that. Okay, so it indirectly affects the stock market. This is a direct influence of the stock market, because 70 billion is injected to institutions and stockbrokers to say, go and buy shares. And again, I'm going to lend you at 1% or less. Go and buy shares that gives you dividends of 2%. Think about that. So 300 billion is going to like stock repurchase, and 70 billion is for like buying shares. What's going to happen to the share price? If I'm going to tell you that next day, someone or the government or Warren Buffett or whoever is going to like buy a lot of the shares in the stock market tomorrow, what's going to happen? So think about this. So I think that there's a huge advantage to look at the Chinese stock market right now, but which one are we going to look at? So based on the 4 key takeaways, well, let me share with you. Maybe if you don't know any specific China stocks, we can possibly look at ETFs. Well, there are some interesting China stocks. Again, not a recommendation, but think about it. Okay, so we can go to ETF.com, and in ETF.com, you can click on tools, go to ETF screeners, scroll down a little while, wait for it. And for me, okay, wait, I think I've already chosen China. So you can click on location and check China. If you don't check China, there's 3,000 over ETFs. If you click on China, there are China ETFs only. Okay, so these are the Chinese stocks. Interesting, there's like internet ETF, there's a large cap ETF, and quite a few for us to take a look at. Again, not a recommendation. I was actually looking for the real estate ETF. I wanted to like possibly buy real estate ETF. It sounds like a good choice, correct? But I realized quite a number of the real estate ETF in China has been suspended from trading. So, well, we don't really have a choice to buy that anymore. I think because the price went down too much. So what we can do is we can look at some of the China, I would say, bigger region ETF. Okay, so this is what I want to share. Do let me know what you think. But before I end the whole entire video, I want to say that this whole entire stimulus may or may not affect China in the long run, but in the short run, I think there will be certain boost to the stock market. Again, it's my opinion. I may be wrong. That's the reason why my last slide is always talking about size is nothing. Our portfolio size is nothing. Don't put all your whole entire money into whatever I'm talking about, or whatever that you decided to. You shouldn't invest in things that I talk about, okay? Do your own homework. Sizing is everything. Position size is everything. You want to invest in China, go ahead. Set aside a certain portfolio budget, and then you can invest in that. If you don't, well, invest in something else. But again, sizing is everything. I do hope this helps you. If you have not, do subscribe to this channel and also join our Telegram group, because we talk a lot more about specific ideas, even option strategies. Last week, we had 100% zero DT and breakout strategies that I'll be sharing in the Telegram group. I'll be having exclusive Zoom sessions. So join us there, and I'll see you in the next video.